for in last couple of weeks. Kunal joins us today. Kunal, 24,000 we held to that level yesterday, but do you think that there's enough support to stay above that today?
Yeah, I think it looks like, because yesterday in the last hour or so, many of the data points have started to improve. You saw short covering coming back, rather the call writers, put writers coming back at the 24,000 mark, trying to protect this important psychological level. More importantly, the put call ratio started to improve from 0.72 when we started off the day, or maybe lower than that, closing almost at the 1+ kind of a mark. So that's a positive, because that indicates it's a complete change of sentiment going into the weekly expiry today. And also, I think looking at this in the context of the last many days of the price correction, the market breadth slightly improved, even though, of course, it was deeply in favor of declines. But then from 300 to almost 3,000 kind of a advanced decline, we managed to cling on quite well for ourselves. Recovery across few large cap names, Reliance Industries, fourth consecutive day where the stock showed signs of uptrend. I think all of that adds to the positivity, and of course, with crude retracing from that $118 to sub 100, I think is a positive advantage, and this could probably place in a bottom for the index, at least over the near term. So that that fear for the markets, where if crude oil prices would kept on rising, that could probably have opened more floodgates on the downside. At least that's not the case right now, and we are looking at a decent bottom being formed at the sub 24,000 mark.
So Kunal, right now, given that it seems that we are headed in for a 200+ point opening up in the green, what do you think is going to lead the Nifty up? Yesterday, of course, it was Reliance which did all the heavy lifting.
So, I was just doing the sector analysis from the first week of February, from the day when the tariff deal was announced. From there, the three top sectors which are emerging is CPSE index. It's apparently the top performer. The second is the PSU banking names, and the third is the Pharma index, which apparently has done very well for itself in the last 1 week, 10 days, where it's shown signs of classic outperformance. So if someone has to bet on the classical themes in the last 1.5 odd months, which has played very well, you can continue to bet on the select PSU names. PSU banks, I think, could be a very good option even at current levels, and especially the large cap names on the PSU banking stocks. And then I think there could be a point where pharma stocks would also try and gain more traction because of the recovery which you've seen for pharma stocks. So it was earlier very concentrated towards few stocks within the pharma pack, but now I think even the larger cap stocks like Sun Pharma, etc., have started to open up. So that's another sector to look out for.
How do you look at the 6 new stocks coming into F&O? You have the Adani Power, Cochin Shipyard, two capital markets, Motilal and Nippon coming in. Then Vishal Mega Mart is also there, which is the
give more options to trading. I mean,
but we've seen a lot of activity in these stocks in the last 3 to 4 months, right? Means the kind of daily turnovers have increased in these stocks, especially Vishal, Cochin. Shipyards have been positive in the last 3 months.
Correct. So I think Adani Power could be a good option. Cochin Shipyard again, I think, is a decent option because the entire sector has been doing reasonably okay. So Mazagon Dock, etc., we saw these stocks showing a 10%, 15% rally in the last 1 week. Hopefully, I think that could probably trigger and trickle to the other stocks within the shipyard names. So hopefully, I think we would probably expect that if these stocks come into the F&O segment going forward, there could be more liquidity, which could probably boost these stock prices, or at least lend some support, which is very much required for this underperforming round of the defense pack or the shipbuilders name. But I think it's a good option to have more stocks liquidating. But the only catch over here, so is that many of the stocks which have entered into the F&Os, they've actually taken a beating first, and then they've shown signs of recovery. So let's hope that's not the case this time.
So Kunal, what would you be tempted to trade today?
So from the PSU names as such, or capital market themes, MCX is something which looks extremely attractive. In fact, yesterday it was one of the very few rare names which start to show signs of positive recovery right from the word go, and continued to move up higher throughout the trading session, or showed signs of decent stability. So would bet on MCX at current levels, targets of 26.35, stop loss at 25.50. And SBI is the other stock after a 5% cut on the stock price yesterday, and a decent recovery, of course, for the stock price. Would look out for a contra bet on the upside. 1135 as a target for SBI, 1084 as a stop loss.
Okay, to buy call.